Should you magically develop the ability to see the future 60 seconds in advance, and you're sitting at the blackjack table and you see blackjack coming, bet large. Right? That's how you win. You have to play the game. You have to bet. You have a winning hand. Play it. Embrace the volatility. Volatility is Satoshi's gift to the faithful. If Bitcoin was not volatile, people with more money than you, more power than you, would outbid you for the Bitcoin. You couldn't have it. The only reason you have the opportunity, the only reason that you have a 21-year head start is because it's volatile. At the point that it becomes completely predictable, Warren Buffett will say, oh yeah, we get it. We just bought all the Bitcoin. The Bitcoin went to 20 million a coin. Your opportunity is gone. You don't actually get rich if this thing doesn't stay volatile. In chaos lies opportunity. It's not the bug, it's the feature. Revel in it. When you're on a ship tossed by a turbulent sea and you get seasick, what do they tell you to do? Focus on the horizon. Look out. What is the horizon? The horizon is 21 years, and what's on the horizon? $21 million. And don't pay attention to what's happening in the here and now. Look out. It will calm you. You won't do something you're going to regret later. HODL, what does it mean? It means ignore the noise. It means the noise dilutes your performance. It distracts your attention. It detracts from your quality of life. The news media, everybody is constructed to actually generate noise, to generate inflammation, to tell you, oh, this or that or the other thing, and you have to avoid allowing it to make you make a mistake or wreck your life. HODL. Remember, on the horizon, 4.8 Bitcoin makes you a centimillionaire. You'll be 300 times as wealthy as the average middle-class person at that point. 48 Bitcoin makes you a billionaire in 21 years if you can get to 48 Bitcoin. And trust me, you're going to want to get to 48 Bitcoin if you can. Why? This is the chance to build your legacy, right? Thinking beyond yourself, you can do it for your family, do it for your children. If you don't do it for your children, do it for your community. Do it for your way of life. At the end of the day, do it for everybody in this room. Do it for the people that took this journey with you, that bled, that sacrificed, that took risk, that fought for this thing that you have an opportunity to share in. This is your legacy. Leave that. If you don't leave it to your children, leave it to the Bitcoin community. And I will see you at 21 million. Be there. My topic today is Bitcoin, time, and the engineering of generational wealth. So this was the status of the macroeconomy in July. Bitcoin was appreciating 55%. It was trouncing the NASDAQ and the S&P. Gold was a laggard. Silver was lame. Bonds were losers. Bitcoin was $1 trillion asset class. It was just less than 0.1% of the wealth in the world. But we could see that something was going to change. I presented a forecast in July, and I said, I really think my base case is Bitcoin's going to grow 29% a year for the next 21 years. And that's going to cause it to appreciate to $13 million Bitcoin. We had a macro forecast And that meant that Bitcoin was growing to be 7% of all global assets. And it was growing to be its own asset class. And you can see here, $280 trillion, but the preeminent monetary asset in the world. So all of that was last July. Bitcoin was $65,000. What happened since? 11 months. Okay, this is extraordinary. I was, as Joe said, I was bullish last July. I've always been bullish, but when Bitcoin dipped to $16,000 during crypto winter, I was bullish. But stuff that's happened in the past 11 months has been extraordinary. The White House has embraced Bitcoin. This is an extraordinary development. We didn't anticipate this. We hoped that we would get a favorable administration, and we hope we get support, and we had this inkling, but November 5th brought a sea change in politics, and although we thought we might have a pro-Bitcoin president, we didn't think we'd get a strategic Bitcoin reserve. We didn't think that the president would say, America will be the Bitcoin superpower of the world. This is an amazing development. The new administration, J.D. Vance, pro-Bitcoin, Robert F. Kennedy, pro-Bitcoin, Tulsi Gabbard, pro-Bitcoin, Kelly Loeffler, pro-Bitcoin, Paul Atkins, pro-Bitcoin, Brian Kentez, pro-Bitcoin, Scott Bessent, pro-Bitcoin, David Sachs, a new position, cabinet-level position, not just pro-Bitcoin, a cabinet member that would go on television and say Bitcoin is the one decentralized crypto network in the world. It is special. It is the digital commodity, right? The one thing that we've all known, but a cabinet member in the United States government says it. He said it in March of this year. Howard Lutnick, pro-Bitcoin. Kash Patel, pro-Bitcoin. Every one of these cabinet members flipped from 12 months earlier, where there would have been no one that would have been as bullish on Bitcoin as what we saw here. Wall Street embraced Bitcoin. $150 billion of capital, 1.4 million Bitcoin. This entire dynamic started in January of last year, but it accelerated after July. Public companies. My company was the first public company to adopt Bitcoin. People thought we were crazy. I thought we were late. I kept thinking that I got it right in 2013. Like, why didn't I buy in 2013? In 2020, I thought I was late. But what happened next is the second company, the third, then 130. Then companies like Trump Media and GameStop in 21. And now, companies are racing to get into the Bitcoin 100. Used to be, we thought, oh, it'd be great, there's 10 Bitcoin companies and 20. Now there's 100. Now there's more than 100. Now we're all going to compete to move up the leaderboard. Yeah, let the games begin. Bitcoin wasn't an institutional asset. It wasn't cool on Wall Street. People thought it might be toxic. Well, now I have a whole set of equity analysts that write research and publish their research to investors, and they put a price target on Bitcoin. So now you have the entire equity capital markets embracing the asset class, writing about it, opining on it. You know, we went from an oddity, tulip bulbs maybe going away, to an entire array of analysts and investment banks starting to have an opinion And of course, if you look at all the prices up there, their opinion is all positive, it's all bullish. Technology investors have embraced Bitcoin. What you see there is the Bank of America investment analyst equating Bitcoin to something as profound as the light bulb, the Model T, the World Wide Web. Right? That's a very important rotation. Bitcoin is a technology. Bitcoin's not a speculation. Bitcoin is not an oddity. Bitcoin is not anarchy. Bitcoin is just the next great technology. Financial regulators embrace Bitcoin. This you never believe. The head of the OCC says banks should support Bitcoin. The Fed says it's okay for banks. They should get on and start supporting Bitcoin. The accountants say you need to provide fair accounting for Bitcoin. The SEC says it's okay to create ETFs of Bitcoin. This is an amazing development. Capitol Hill embraced Bitcoin. The House, the Senate, the Cabinet, you've got 3 bills, the Clarity Act, the Genius Act, the Bitcoin Act, all moving through Congress right now. This is something nobody guessed, no one conceived of a year ago. States in the United States are embracing Bitcoin. Governors, right? There's legislation working its way through state legislative branches everywhere. You know, Bitcoin is money for everybody. Bitcoin is for everybody, and everybody is getting interested in it. International governments embrace Bitcoin. Spokespeople for the UK, for Ireland, for Pakistan, for Bhutan, for El Salvador, for Russia, in China, in Hong Kong, in Europe, everywhere, right? They all have an opinion. Their opinion is this is very important. This is an extraordinary movement. The crypto industry has embraced Bitcoin. And this is extraordinary. You should all give yourself a hand because you've won. These are all public statements from the last 12 months, and let me tell you how I interpret this. This is everybody in the crypto ecosystem acknowledging that Bitcoin is the foundation of the crypto economy. Bitcoin is the reserve currency of the crypto economy. Bitcoin is the one central, certain, unshakable protocol and the fulcrum, the focal point of the entire industry. Everything else is built on top of it. There's been an unprecedented coalition that's come together in support of Bitcoin, and I think a realization that the entire industry needs Bitcoin as their ethically sound, economically sound, technically sound foundation if they're to have any future. And I think you guys should be very, very proud of that development. 12 months, what's going on? Bitcoin is still running hard, running harder than it has been, up 61%. The Magnificent Seven and the S&P are underperforming. They're struggling. The tariff wars, the trade wars have been a challenge for them. There's been a general mainstream lagging of confidence, and that's caused a surge in gold. But Bitcoin is running much harder than gold. Real estate soldiers on and bonds continue to fail. Bitcoin's outperforming all asset classes this decade too. So it continues with what you would expect, 56% on average ARR for the past nearly 5 years. More than double the Mag 7. That's more than double, about double the S&P. You've got gold, a little bit of a surge starting to catch up, but gold's still underperforming the S&P, and real estate less. this is an important chart. Here's what this chart is telling you. The cost of equity is 13%. That means that if a company's capitalized on gold, real estate, bonds, soybeans, oil, any other commodity, it can't beat the cost of equity. You cannot sell equity to buy real estate. It's dilutive. There is only one asset that a company in the world can hold that you can capitalize on that is higher than the cost of equity, and that is Bitcoin. And so you see the explosion in Bitcoin treasury companies is because now that the world's recognized a digital commodity, they also recognize it beats the cost of equity. That means that every public company, in theory, should recapitalize on Bitcoin, because when they sell equity, they're actually generating profits. They're creating an accretive transaction for their shareholders, right? The world is waking up to this. You see that hence you see an explosion, in the shares of Metaplanet and Smarter Web and H100 and Blockchain Group, right? This is going to continue. These companies are going to catch fire everywhere in the world, in every capital market, for one simple reason. Investors can see that 56% is more than 13%. It's just that simple. And this is it's a very powerful dynamic. And yet Bitcoin is just 20 basis points of global wealth. So here's an interesting thing. We are now at an inflection point. We have all the information to know Bitcoin is winning, and yet the majority, 99.8% of the capital in the world, still pretends and acts like it isn't. Most is still oblivious. You know something the rest of the world has not yet acknowledged, and yet it couldn't be clearer to all of us in this room. There's a monetary revolution afoot, a revolution in economic thinking. It's spreading everywhere in the world. It's fueled by the digital transformation of the capital markets that you see manifested in all of these companies and all of these securities and all of this Bitcoin activity. And it's going to be accelerated by explosive financial innovation. That innovation is surging now. You can see it everywhere around us. Every single company is thinking, how do I integrate? What am I going to do? So the revolution is afoot. The world is bullish on Bitcoin. It's being adopted faster and more aggressively by governments, by banks, by corporations, by investors than nearly all of us thought a year ago, right? We were bullish a year ago, but certainly I'm hearing now BBVA is supporting Bitcoin. I'm seeing the Secretary of the Treasury saying it's okay for banks to Bitcoin. We've seen the explosion of all these Bitcoin treasury companies. I didn't think they would go so fast. I didn't think Smarter Web would go from £4 million to £1 billion in 2 months. Let's give them a hand. That's amazing.
What do you find appealing about Bitcoin, about digital currency? Where do you see it going in the next 10, 20 years? And what are some of the challenges with respect to Square, but also just bigger for our globally, for our world, for the way we think about money?
I think the most beautiful thing about it is there's no one person setting the direction. And there's no one person on the other side that can stop it. So we have something that is pretty organic in nature and very principled in its original design. I think the Bitcoin white paper is one of the most seminal works of computer science in the last 20, 30 years. It's poetry. I mean,
Yeah,
it
it's
really
pretty
is.
cool technology. I mean, that's not often talked about. There's so much sort of hype around digital currency, about sort of the financial impacts of it, but the actual technology is quite beautiful from a computer science perspective.
Yeah, and the underlying principles behind it that went into it, even to the point of releasing it under a pseudonym. I think that's a very, very powerful statement. The timing of when it was released is powerful. It was a total activist move. I mean, it's moving the world forward in a way that I think is extremely noble and honorable and enables everyone to be part of the story, which is also really cool. So you asked a question around 10 years and 20 years. I mean, I think the amazing thing is no one knows. And it can emerge, and every person that comes into the ecosystem, whether they be a developer or someone who uses it, can change its direction in small and large ways. And that's what I think it should be, because that's what the internet has shown is possible. Now there's complications with that, of course, and there's certainly companies that own large parts of the internet and can direct it more than others, and there's not equal access to every single person in the world just yet, but all those problems are visible enough to speak about them, and to me that gives confidence that they're solvable in a relatively short time frame. I think the world changes a lot as we get these satellites projecting the internet down to Earth, because it just removes a bunch of the former constraints and really levels the playing field. But a global currency, which a native currency for the internet is a proxy for, is a very powerful concept, and I don't think any one person on this planet truly understands the ramifications of that. I think there's a lot of positives to it. There's some negatives as well.
Do you think it's possible, sorry to interrupt, do you think it's possible that this kind of digital currency would redefine the nature of money, so become the main currency of the world, as opposed to being tied to fiat currency of different nations, and sort of really push the decentralization of control of money?
Definitely, but I think the bigger ramification is how it affects how society works, and I think there are many positive ramifications
Outside of just money,
outside of just money. Money is a foundational layer that enables so much more. I was meeting with an entrepreneur in Ethiopia, and payments is probably the number one problem to solve across the continent, both in terms of moving money across borders between nations on the continent, or the amount of corruption within the current system. But the lack of easy ways to pay people makes starting anything really difficult. I met an entrepreneur who started the Lyft/Uber of Ethiopia, and one of the biggest problems she has is that it's not easy for her riders to pay the company, and it's not easy for her to pay the drivers. And that definitely has stunted her growth and made everything more challenging. So the fact that she even has to think about payments instead of thinking about the best rider experience and the best driver experience is pretty telling. So I think as we get a more durable, resilient, and global standard, we see a lot more innovation everywhere. And I think there's no better case study for this than the various countries within Africa and their entrepreneurs who are trying to start things within health or sustainability or transportation, or a lot of the companies that we've seen here. So the majority of companies I met in November, when I spent a month on the continent, were payments oriented.
You mentioned, and as a small tangent, you mentioned the anonymous launch of Bitcoin is a sort of profound philosophical statement.
Pseudonymous.
What's that even mean? Like there's a pseudonym. First
Well,
of all,
there's an identity tied to it. It's not just anonymous. It's Nakamoto. So Nakamoto might represent one person or multiple people. But
wait, let me ask: are you Satoshi Nakamoto? Just
no.
checking.
And if I were, would I tell you?
Yeah, that's true.
But
a
pseudonym is constructed identity. Anonymity is just kind of this, random, like, drop something off and leave. There's no intention to build an identity around it. And while the identity being built was a short time window, it was meant to stick around, I think, and to be known. And it's being honored in, how the community thinks about building it. Like the concept of Satoshis, for instance, is one such example. But I think it was smart not to do it anonymous, not to do it as a real identity, but to do it as a pseudonym, because I think it builds tangibility and a little bit of empathy that this was a human or a set of humans behind it, and there's this natural identity that I can imagine.
But there is also a sacrifice of ego. That's a pretty powerful thing from the perspective.
Which is beautiful. Yeah.
Would you do, sort of philosophically, to ask you the question, would you do all the same things you're doing now if your name wasn't attached to it? Sort of, if you had to sacrifice the ego? Put another way, is your ego deeply tied in the decisions you've been making?
I hope not. I believe I would certainly attempt to do the things without my name having to be attached with it. But it's hard to do that in a corporation, legally. That's the issue. If I were to do more open source things, then absolutely. Like I don't need my particular identity, my real identity associated with it. But I think the appreciation that comes from doing something good and being able to see it and see people use it is pretty overwhelming and powerful, more so than maybe seeing your name in the headlines.
Metaplanet goes from 10 million to 1 billion, and I was ready to declare victory. I thought, that's great, that's 100x. And then they surged to 8 billion. Let's give Metaplanet a hand. It's amazing. So of course you're bullish, I'm bullish, but the point is the governor of Texas is bullish. The point is the president of the United States is bullish. The point is people you don't know in places you've never been are bullish. This is extraordinary. And I take a moment to go back to someone that was bullish when none of us were here, when none of us had this information. January 10th, 2009, the network launched technically January 3rd, but it was kind of clicking away by January 9th. And the next day, a certain genius estimates that Bitcoin could be $10 million a coin. And this is so humbling. It took the rest of us 16 years, $2 trillion in order to come to a conclusion that, yeah, this is going to happen. Thank you, Hal. Inflection point, ignition point, escape velocity. When a nuclear reactor comes online, when the chain reaction starts up, we call that criticality. Bitcoin's reached criticality. The network has come to life. The work's done. The power's flowing. And there's no off switch. Satoshi's fire is now unstoppable, right? The network is unstoppable. Thank you. Satoshi's point is the Schelling point of global money. We can now see, you can see, I can see, the rest of the world is beginning to see then in fact there is an inversion and there's a transformation. This network doesn't need me anymore. This network doesn't need anyone anymore. It's going to continue to grow, and no one can stop it. And so with that, with the help of all that information, I'm going to now share my Bitcoin prophecy. I think we're going to be $21 million in 21 years. It's a very special time in the network, maybe the one time in the history of the network where you look out 21 years and you see 21 million. Specifically, I expect 21 million coins at a $21 million price in 21 years, and people ask, how's the network going to grow? It's going to be growing at 21% in 21 years. The volatility is going to be 21. The only number you need to remember is the number 21. And what does that look like? Well, that looks like 28.5% from here. Not that different, slightly less than 29% ARR. But the path to 21 million, it's not going to be simple. It's going to be volatile. And so you're going to see a volatility, and it's going to damp over time, but you got to be prepared for the volatility, for the surges and the drawdowns, the good days, the bad days. This is Bitcoin's annualized return looking back a decade, looking forward 2 decades. And you can see that the network was growing faster when it's small. That's totally rational. It's now in the mid-50s. What do I expect? I expect it will continue to grow exponentially, but as it approaches hundreds of trillions of dollars, it will decelerate to the point where it's growing about 21% a year. Now, how does that compare to the S&P? It'll be growing faster. In 20 years, it's still going to be the best idea. It's still going to be the most lucrative capital asset a company can hold. It's still going to be durable, vital. There will not be a better investment in the year 2046. And I think it's very important to understand that Bitcoin's trending toward the performance of the best capital assets in the world, in the conventional world, which are like, Mag 7 digital monopolies mixed into an index. It's trending toward it, but it will never reach it. And it will never perform at that level because it's always going to be better. It's always going to be more useful. It's always going to be less risky. It's always going to have the counterparty risk of a company stripped away. There's never going to be a CEO to subpoena. There's never going to be a labor force. There's never going to be the challenge of a supply chain. It's never going to have a tariff on it. It's going to be pure digital energy, pure economic energy. By then, it will be moving at the speed of light on layer 2s, on layer 3s. It'll be moving 10 million times a second. It'll be trading between billions and billions of nodes and billions of other nodes. There's going to be nothing else to compete with it. It will be the most valuable thing, performing the best. You're not going to want to sell it in 21 years. You're just going to wish that you had acquired more of it. And here's the volatility. Looking back, volatility, okay, it's 80, 90 vol, 100 vol. Today it's the mid-50s, the mid-40s. What do I expect? Well, this is kind of very straightforward. The volatility is going to also dampen as the asset class grows, as the structure matures. As the options markets come on, when the banks embrace Bitcoin and they'll give you a loan, the volatility will damp. When it's fully banked, when it's fully optioned, when the mainstream investors are invested in it, the volatility will damp. But the volatility of the S&P is the VIX, it's 16. Bitcoin's going to be 21. Bitcoin's always going to be more volatile. because it's more useful, because it's more pure, right? And because it's more leverageable, because you'll have more capabilities and you'll be able to do more with it everywhere in the world. It will be raw economic energy, and that's okay. Volatility is vitality. So now you have a future, $21 million, 21 ARR, 21 vol. This is the important part of the presentation. What will you do? First of all, you have a 21-year head start. You know something 99.8% of the capital in the world does not yet know, right? You know that this thing is unstoppable. You know that everybody needs it, and very few people understand it. That's the most valuable information in the world. If I told you Bitcoin was going to 21 million tomorrow, that's not useful. It's too late. I'm giving you something much more valuable. I'm giving you 21 years to leverage that information while everybody else is oblivious, while everybody else is afraid, while everybody else is distracted. You can do something. If you build the right machine, build a money-making machine for yourself. If you build the right machine and you plug it into the Bitcoin network, it will grow stronger every day. It will grow stronger every year. It will compound extraordinary wealth. Extraordinary wealth. And you will change your world. You have a once-in-a-lifetime opportunity to change the destiny of everybody in your bloodline, to change the destiny of your community, everything you hold dear, to change the political course of human history. You can do it. You have the opportunity because you have the most valuable information in the world. And the question is, how are you going to do it? What is your Bitcoin strategy? You need a 21-year plan, right? If you have the vision, but you don't have a plan, you're just dreaming, right? You're not going to get there by talking about it. You need clarity. You need to know what's going to happen. You need courage. You need to be willing to take a risk. You need to put your own economic interest at risk. You're going to need to take a courageous step, and then you need to take action. Clarity, courage, action. People that understand Bitcoin buy Bitcoin. People that don't understand Bitcoin talk about Bitcoin. So what are you going to do? You're going to build a long-term plan based on disciplined work, responsible finance, sound engineering, and Bitcoin. So I'm going to lay out a few possible options for you here, and then you can decide what you want to do and how aggressively you want to do it. Let's start with this one. DCA, dollar cost averaging. What is the strategy? The strategy is work carefully for the next 21 years, buy 50,000 US dollars worth of Bitcoin each year, increase your savings by 5% a year, and then hold the Bitcoin. That's a strategy. What happens if you do that? Okay, well, you can see your investment's going to gradually increment by the 5%. Over the 21 years, you'll end up putting $2 million of cash into this investment. And what's your outcome? You're going to end up with 1.9 Bitcoin. It's going to be worth $40 million. Okay, $40 million. How does that compare to other strategies? Well, if you take the same money and you put it into the 60-40 portfolio, if you're a conventional investor, if you take the advice of your financial advisor, you will have $4 million. If you put it in the S&P index, don't diversify out of that. You're going to have 6 million. If you actually invest in Bitcoin, but then every time Bitcoin doubles, you rebalance the portfolio. If you're responsible and you engage in that rebalancing, you'll have 15 million. If you let Bitcoin run by a factor of 10 and then you take money off the top and you rebalance that way, you'll have 28 million. And if you just buy the Bitcoin and don't think about the rest, you have 40. So the difference between conventional and Bitcoin is a factor of 10x. That's the DCA strategy. What's the next strategy? Leverage. Borrow $1 million up front. Pay less than 10% interest if you can. You're leveraging your future. You're going to tap your underutilized assets. If you got to sell your chairs, sell your chairs. Mortgage your house. Use capital intelligently. Ask your family for a loan. Approach your grandfather, your grandmother, your father, your sister, your uncle, your brother. Ask your friends next. Don't pay off your student loans. Definitely don't pay off your mortgage. Okay, what happens? Well, that's a single jolt of energy, one time. It's worth $190 million to you. Okay, okay, that's actually the payoff of courage, taking a risk. What happens if you combine the two together? You basically borrow the money up front, you DCA, and then every year you leverage 5% of your existing Bitcoin stack into Bitcoin again. This is what the outlook or the outcome looks like. You're going to end up with $260 million of US dollar value. You end up with approximately 14 Bitcoin, and you can see the recycling of the leverage is a very powerful technique here. What about a financial strategy? Let's just take that a little bit further. What if I just recycle 15% leverage? Not 5%, 15%. You can still survive an 80%, 70, 60% drawdown. What happens? This. You'll be up to $370 million. And then here's a business strategy. I form a company. I maintain 10% leverage. I issue 5% equity every year at a multiple of NAV of 2. 5% dilution a year on a business. Okay, what happens there? Well, you're going to generate $760 million of wealth by issuing equity and by staying a little bit levered. And so you can see it when you consider these comparisons, right? DCA is work hard, invest in Bitcoin. Leverage is use some financial engineering. The DCA plus leverage takes you much further. The financial strategy, of course, is almost 10 times the DCA. And then the business strategy, of course, is extraordinary, almost 20x. Now, let's talk about tradecraft. How do you do this without getting liquidated? How do you do this in an intelligent fashion? So this is a credit matrix. On the y-axis is the interest rate you're paying. On the x-axis is the duration of the credit instrument. If you're borrowing money for less than 5 years, 4 years, you're a gambler. When you're borrowing short-term money, you may get liquidated, especially when you're borrowing money for 4 weeks or 4 days or 4 hours. This is a little bit of a risky zone. When you're borrowing money that costs you 20 or 30% interest in short duration, you are a loan shark victim. Okay, this is suicidal. You're going to get your legs broken. Do not do that. When you borrow money at expensive rates for long periods of time, you are an indentured servant. You're a debt slave. You're going to work your entire life. You're going to have nothing to show for it. That does not make sense. What you want to do is borrow money for 10 years or longer and you'd like to get the interest rate below 10%. So 10-year duration less than 10%. If you get to a 30-year loan with 3 or 4% interest, you're a financial genius. You know what that is? That's mortgaging your house 2 years ago to buy Bitcoin. Right? That's the thing that all the non-coiners made fun of us for. But if you were smart enough to take a 30-year or 20-year mortgage at 3 or 4% and buy Bitcoin, you are a financial genius. Not complicated. You're swapping 3 or 4% cost of capital for a 29% return on the capital. What about equity? Okay, so you have a company. If you sell 90% of the company at 3 times NAV, you just cashed out. You made a lot of money, you're retired. You're gonna sit in a rocking chair, you're rich. Congratulations, right? That is your exit strategy. If you basically sold 50, 60% of your company at 3, 4, 5 times NAV, you're a racehorse, you're gonna be racing, you'll have a jockey, that's good, you're in business with other people. If you manage to sell 20% at 7 times NAV, you're looking like a unicorn. People are going to write books about you. You're going to be the cover of magazines. And if you can actually sell less than 10% of your company at a 7, 8, 9 times NAV, you're Pegasus, okay? You're a superstar, a shooting star, right? They're going to write entire books and teach courses about you, right? So that red line is the no-go line. If you're selling equity below 1 times NAV, you're diluting your own shareholders, right? That's awful. And so you got to stay above that. Now, some common objections. You're going to hear these objections. You're going to hear more of them from all of your, wealthy financial advisors or wealthy friends that are no-coiners, and they're going to say things like, hey, it's too late. It's too late, you did it, but if I'd done it back in 2013 or done it in 2020 or done it whenever, it's too late. But here's what I have to say. Henry Ford decided to harness fire 1 million years after human beings discovered fire. It was not too late. It's not too late to use the wheel. It's not too late to master explosives. It's not too late. If you need a gun and someone invented a gun 500 years ago, you're not going to say, well, I guess it's too late for me. Or how about English? Someone learned English before you. It's too late. It's an old language. I guess it's not that useful anymore. Or to fly. I'm not the first person to fly. There's another company in my town. They installed electricity. It's too late for my company. After all, someone else installed electricity first. I don't really need electricity. It's too late. Or the mobile phone, too late to use a computer, too late to get on the internet, too late to go to space. It's too late to buy a Bitcoin. Here's what they're missing. Bitcoin's technology. It's not a speculation. It's the ignorant speculators that think it's too late because they don't understand that it's digital energy, it's digital technology. It's never too late to master technology. And I would leave you with the thought, it's never too late to do the right thing. I mean, it's very simple. Second big objection, oh, it's a Ponzi scheme, it's tulip bulbs, blah, 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 it seems too good to be true. The 4 most dangerous words in finance, this time it's different. John Templeton. Well, Sir John Templeton is not on the walls of MIT's great court. They have Newton and Madame Curie and Einstein, and Galileo, but they did not put his name up there because he's not a scientist or an engineer. And the point is, this is different. Fire is different. Water is different. Wind is different. These things, guns, germs, when the Spaniards show up in the New World and 90% of the Native American Indians die because of the germs, it was different, right? These things are not the same. John D. Rockefeller noticed oil was different. If you're actually basing your strategy on a technology or a paradigm shift, then in fact it is different. And the point here is Bitcoin is different. That's why it matters. People that tell you it's not different, they don't understand it, don't be swayed by them. And now I'm going to end with some final thoughts. There's a saying in the American West: the cowards never started, the weak died along the way. In this case, to never start means to never invest in Bitcoin. If you have your money and it's invested in not Bitcoin, you never started. You have to put your capital into Bitcoin. And then the weak dying along the way, okay, well, you did a stupid deal with a loan shark and he broke your legs because you borrowed money for 4 weeks at 37%. Okay, don't do that, right? It's not an easy journey, but neither is getting in a wooden ship and sailing across the Atlantic an easy journey. The best way to predict the future is to create it. Everybody in this room can watch or wait, or you can go and create the future. Metaplanet's creating a future in Japan. H1's creating a future in Sweden. Smarter Web is creating a future. BTC Prague is creating a future. Everybody here is creating the future. Build the machine, put energy in it, turn the crank, harness the energy. 21 is the winning hand. You're sitting at a blackjack table and you get a king and an ace. You can't lose. We've got the winning hand, 21 in 21 years. You know it? There's only one way to lose, and that's not to play the game.
I noticed that we have a lot more political representation this year, which is a wonderful, remarkable thing. We've reached the fight, the stage of the fight where, you know, they go, oh, then they fight us. But it's actually, then they try to get us to love them. And what I want to say on that briefly, because I don't want to make this talk about all the politics there, is cast a vote, but don't join a cult. They are not our tribe. They are not your personality. They have their own interests, their own values, their own things they're chasing. Try to get what you need from them, but don't give yourself to them, even if you have to vote for them. Instead, what I want to do is set this frame a little different for this conversation. I want you to reflect on where we are, how we got here, and where we're headed. There's a passage from a book that I think for this crowd really resonates. It says, for in every country of the world, I believe, the avarice and injustice of princes and sovereign states, abusing the confidence of their subjects, have by degrees diminished the real quantity of metal value which had been originally contained in their coins. Adam Smith, Wealth of Nations, written in the year 1776. We're not playing games with metals anymore. But if you look around, you can see that the problems from that kind of thinking are springing up everywhere. They're reaching us, they're choking us. And you see this in the internet as well. What is it that's wrong with the internet? The thing that's wrong with the internet is what's wrong with the world, because more and more they're one and the same. A system has been constructed around us, not just through administrations, but through generations, that is fundamentally unfair. What do I mean by that? Look at the economy, right? There's an increasing concentration of resources into fewer and fewer hands. So it is now even with the human voice. Winner take all is the model that's apparent on platforms. platforms as far as the eye can see. Whether you're talking about broadcast media, whether you're talking about legacy media, whether you're talking about newspapers, whether you're talking about social media, minority opinions are increasingly made to survive at the indulgence of the censor. You know, they're clinging to the edge of the platform by their fingernails. You see truckers in Canada that are getting debanked, and you see students at Columbia are getting de-hired for the things that they express. Now, we don't have to agree with them. We shouldn't necessarily agree with them, but they should have the ability to argue. They should have the ability to persuade. They should have the ability to dissent. They should have the ability, frankly, to disrupt. That's the thing that makes us progress, right, is the disagreement. If we accept that the system that we inherited is the best that it can possibly be, it shouldn't change, it shouldn't be contested. What we're saying is that we've gone far enough. This point in history is the best, and it's not. We know it's not. Life is still difficult despite the many privileges, despite the many technologies that have blessed us. But somebody made those things happen. Every good thing that you enjoy is the product of someone's labor, the product of someone's effort, the product of someone's ingenuity, the hours of their lives being gifted to us, to the common species. And the system that has been built around us is designed to extract as much of that as possible and return that to the hands of those princes. You'll notice none of the things that I mentioned are, deeply technical in nature. It's all very broad and general audience. But the thing that I want to warn you about tonight is that I fear that that is about to change. Our lives have been increasingly intermediated by screens, by panes of glass, right? You are watching this either live on stage because you registered through a smartphone, through a laptop, right? Nobody went and sort of bought a ticket at the counter anymore. That's not how the world works these days. But in order to even set that computer up, to turn it on, to log in, to set up your account, to pull the smartphone out of the box, charge it, open it up, connect it to your Wi-Fi access point, you have to click OK to continue. You have to agree to somebody else's terms of service. You are made to pass through gates of permission that are owned and controlled by others, that do not answer, frankly, to anybody. You see Facebook, you see Google, you see how they've been abusing the trust of everyone in every country, right? You see the EU tries to get a handle on them. They're completely ignored. There was the GDPR, right? General Data Protection Regime, or regulation that was supposed to fix all of these problems, and it didn't work. They say, oh, we'll fine you, 4% of global revenue or whatever if you break the rules. That hasn't happened, and it's been years and years and years. Whether we're talking about governments, whether we're talking about corporations, we're talking about the same thing. We're talking about the systemization of technologies that are designed to order our lives to the benefit of the institutions. They are trying to organize us to benefit them. In some cases, we want this. We want to be able to cooperate. We want to be able to collaborate. We need to be able to work together, right? But we have to agree to this in some way. We should need to. And it's not like click OK to continue or say no and use the phone my way, right? It's click OK to continue or you can't use your iPhone. You can't use your Android phone. It doesn't matter whether Samsung makes it, whether Google makes it, whether Apple makes it. You play by their rules or you don't play at all. And that should be changing. We'll get to it a little bit later where we are making great strides in the context of money, which is why suddenly we see a lot of political interest in these audiences. They understand that there is a new center of power that is rising. But there is a new field of vulnerability that applies to all of us, including all of these luminaries that will be speaking on stage here. And that is artificial intelligence, right? I am not one of the guys that goes on the internet and is like, oh, AI safety, the robots are going to kill us, you need to worry about this. I say, in fact, I want all of them to dump all of these models out on the internet where we can all use these OpenAI, which is not open at all and is a very closed model company that wants to benefit themselves at your expense. They want to train on your data, but benefit themselves. And they don't want you to have access under the covers. They don't want you to be able to pull down the models, distill it, get one you can run at home, put it on your phone, do whatever you want with it. They want you to have to go back to their watering hole, pay them rents, and to access all of this only through their ways, even if you did have the ability, technologically, hardware-wise, to run this at home. The good news is it is becoming easier and easier to get this stuff in public hands, to run this on home machines. And I'm not just speaking rhetoric here. I've spent the last year using these models myself at home. You can do this too. Open source models, whether we're talking about diffusion models for generative imaging, right? Sort of what you think of like the Mid-Journey, the nice web interfaces. You can do that at home. It's 100% free as long as you've got the hardware to run it. And it's getting easier and easier to do this. Whether we're talking about large language models, Facebook, which again I've been throwing invective at for the beginning half of the talk, has actually been a force for good in this space. Not because they love you or they love us or they love me or anything like that, but because they're afraid their competitors, like OpenAI that I mentioned, are going to build a structure around them, ring-fence them in a little plot that they can then tax forever. And Facebook doesn't want to end up there, right? So they go, well, what we'll do is we'll develop the tools and give them to everyone else so a monopoly can't form and be used against us. Self-interest more so than altruism, but I still applaud it, right? And I'm no fan of Mark Zuckerberg, but he's done wonderful things here. I hope he continues. I know it won't last forever, but for the moment, while it does, I'll welcome the help that we can get there. But why am I bringing this up, at a Bitcoin conference? Well, the reason why is that Bitcoin transactions are not private. All of you know this here on the general sense because it's 2024 and this is not, back in 2013 where we're saying, Bitcoin is perfectly anonymous and it's money for criminals and whatever. The only person who still believes that is Elizabeth Warren. The reality is that Bitcoin transactions are permanent, they are public, and they can be tracked and they can be linked. An enormous proportion of them are fully doxed, just not publicly doxed. And this is because how do people move in and off of sort of the Bitcoin network, any crypto chain really? And it's through the on and off ramps, right? Through these legacy exchanges that get licensed by whatever New York State or whatever country, whether it's in Dubai, whether it's in New York. And they are sharing the information en masse with what we politely refer to as regulators, but what are plainly described as great powers. Right? People are not really focused on sending this stuff to the government of Barbados. But if they're worried about catching an indictment from that government, they will send anything that government asks for to them, and then they'll say, is there anything else you need while we're at it? Well, there was still one saving grace, which was there were parts of that chain which were not fully identified and verified. You could have private transactions. You could send $5 for your buddy for pizza, as long as the on-chain transaction fees were low. Otherwise, you wait and save it up. But the idea here is that you could still engage in the network and presume that it would just age off eventually. It's out there, it's on the blockchain, somebody has it, maybe they'll prune it. But it's not you. It's not that everybody will know everything you did anywhere all the time forever. Because when they have your transaction history, they have your life history. They know what you read, what you buy, who you send, who you support politically, like where your donations went. All of that is available to them. They can infer your thinking. They can infer your affiliations. At the NSA, we called the kind of information that was not the details of a conversation, right? Not literally reading like your texts, but simply saying that you texted someone. And this was under their interpretation. In my interpretation, it's a violation of the Constitution, but in their interpretation, this didn't impact the Fourth Amendment at all because it's not a search, because it's not reading your messages themselves, it's simply tracking the flow of messages. We called this kind of information metadata, right? And that metadata padded out what was your pattern of life. Metadata can be plainly described as activity records. It's the same kind of thing that a private investigator would get if they just followed you around all day. They don't sit behind you at the cafe and hear everything you say because you would wonder, who is this dude following me? But they sit outside in a car on the street. They see that you go in the cafe at this time. They see that you sit at a table with this other person. They send a guy to go, who is that person? What's his license plate? Who is he? They know that you met. They get the affiliation. They see you go to work. They see you go to the store afterwards. They don't see every item that you bought, but they see where you shop. And as you pad these things out more and more, you get a more and more complete picture of an entire human life without ever having to go, oh, we need a warrant for this. What held that back? Well, cost. You needed a human analyst to go and sift through this. The metadata could be collected automatically by ingesting the world's internet communications through these machines, right? But somebody still had to put their cup in the big bucket, pull it out, and you know, lay it out on their desk and make sense of it. Machine learning models are going to change this. In my opinion, this is already being done. We simply don't have evidence of it yet. It's going to be testing, it's going to be development. We don't know how it's being applied, when it's going to be truly operational, but it is fantasy to imagine that they're not doing this. And there is zero regulation that I am aware of in the United States to prevent this. Nobody is thinking about what these agencies are doing. And we're not just talking about the NSA here, we're not just talking about the FBI, we're talking about the IRS, right? And it's not just the United States, it's every country. You may go, oh, I love the United States government doing this, I hope they spy on me as much as possible. Well, what about China? What about Russia? What about North Korea? What about Iran? What about every little government that you don't like, that you don't agree with, right? And suddenly they can have every life of every person, every day, at every moment, on a live feed, being interpreted at machine speed. And then you start feeding that those inferences into a decision-making process. This is the reason that I bring up the protesters at Columbia University, the protesters in Canada, right? It doesn't matter whether you're liberal, it doesn't matter whether you're conservative. If you stick out, if you stand out, you're going to become non-normative. Or rather anomalous. What I am afraid is likely to happen quite quickly, right? Probably not this year. Within 3 years, it'll begin being done. I think at some scale, within 5 to 10 years, it'll be done absolutely regularly, routinely. Is that they're going to take all of the transaction information that they can get. And this is going to start with big banks going on their own personal data sets. It's going to flow from there to people going, oh, where can we get this information publicly? Well, the Bitcoin blockchain is available for anyone for free at any time, right? And how do you train these models? You need learning sets, you need training data, you need data sets. So they're going to pull everything they can, they're going to feed it through these things, and they're going to try to teach them originally, I think this is going to be the easiest thing, what does a normal transaction look like? You know, what do 95% look like? And then they're just going to go, what is anomalous? What is strange? What is unusual? What doesn't quite fit? And then they're going to go from that's a 5% probability down to a 3% probability, then try to get it smaller and smaller and smaller until they can just basically have people that are getting reports spit out on their desk, little, you know, chat messages to their terminal, basically. They're saying, this just happened, this just happened, this just happened. Do you want to continue? And that banking officer is going to get a click OK to continue on your life, on your ability to transact, on your ability to trade. It's not just going to be Bitcoin, it's going to be Visa, it's going to be MasterCard, it's going to be everywhere, it's going to be PayPal, right? Whether you're subscribing to an OnlyFans account or something like that, which, you know, is a very common thing, but something that a lot of people aren't going to admit to, they're not going to be proud of, right? that's going to start making these institutions go, oh, do we want to continue our business association with these people? Is there a brand risk, on stage here? And I think we really need to think about how do we secure the transactions on the Bitcoin network moving forward. I have said this for 10 years. I have been ignored for 10 years. Well, we're running out of runway. And again, right now, every time you're on this network, and I love this network, I've used it many times, you are going to be adding to the data set. Even if they don't identify you because you're the, whatever, mystic cyber ninja that knows how to protect yourself, who is the counterparty that you're trading with? Are you sending it to your buddy? Are they doxxed, right? Are you sending it to a business that you're paying? Are they doxxed? And larger and larger parts of this transaction mesh of this network, as they get identified, the space for everyone else to have any kind of private interaction diminishes. Now, you might go, well, these big businesses, Visa, MasterCard, yeah, they have the transaction history for everybody, everywhere, all the time. And you don't know what they're using it for. But they're not screwing you, right? Well, AT&T, it was revealed this year, lost all of their subscribers' information, or an enormous subscribers' information, for a block of time. I think it was something like 6 months. Where all of your text messages, all of your phone calls, all of the things that went through their routing network, including some cell site location information, which means which cell phone tower you were connected to, were stolen by hackers. They haven't said who they are, as far as I know. They may not have been identified yet. Maybe they'll never be identified. We don't know whether it's state-sponsored or whatever. Maybe there's been ongoing reporting since then that's revealed it. Correct me if I'm wrong. I'm sure somebody will be out there to tweet about it. But the bottom line is this, right? These enormous data sets are a liability. We know they cannot protect them. You cannot control them. And they can have enormous influence over our lives. All of these people who are coming up on stage and saying these wonderful things about how much they love Bitcoin, how much they love you, how they're going to do all these wonderful things to make something better. The United States is the only advanced democracy on the planet that I am aware of that does not have a basic privacy law. We have the Fourth Amendment, right? That only binds the federal government. That doesn't do diddly squat to protect you against corporations. And the government, for 90% of their work, probably 95% of their work in intelligence nowadays, they simply go to corporations and ask them for information. It's end run around the Constitution. And we have been able to suffer this, right? Again, the game is too good to leave. Not because we love it, but because we haven't had a choice. Well, we're running out of time to fix this, and the consequences of ignoring it are about to get a whole lot worse. Nobody sees this is not Terminator, right? This is not Skynet. This is not robots descending from the sky to drag you out of your home. That might come someday, but that's a long way off. But we're talking about some things that are much more banal, but much easier to do. We talk about that concentration of power. These politicians, right? A lot of them probably don't love that they have to come up on this stage and give a dog and pony show to dance for the crowd that is suddenly much more powerful. Well, the people that they have always been answerable to are about to get a much tighter hold on the leash, not just of them, but of everyone. So I want to zoom back out because we've only got a limited time this evening and say, look, the reason that the internet feels broken is because it is reflecting a broken world. It's reflecting the consequences of all of these winner-take-all dynamics. It is reflecting the boundless ambition of these generations of princes. And it has left us with an unfair system, which means an unstable system. Why do I think all of this AI stuff is likely? Well, the reason is that unfair systems produce dissatisfaction and therefore are hard to maintain. Well, the people who want to maintain them are those who benefit the most from them. In the current disequilibrium, they're the ones who have the most resources. They have the ability to influence the status quo the most. And what they're trying to do is they're trying to keep the top spinning for as long as possible without letting it fall over and someone having to write it in a new stage, right? Instead of staying in the same game, even if it's good, we don't want to leave it. We start a new round, right? We start a new game with new rules. The reality is we're not at the worst of it yet, but we are headed in that direction. It's clear to me. And I think if you look at, like, does this feel normal to you? When you look at the candidates, when you look at the dynamics, even the people on stage giving all the speeches, right? I'm not saying they're terrible, right? Or not taking a position at all. But this is a little unusual. The fact that they're here is a little bit unusual. Things are changing, and they're changing more quickly all the time. We have passed the inflection point, and we are accelerating down the slope. And we're reaching the point where all of us are about to have to make very serious decisions about how we spend the rest of our lives to try to make the world better for our children and for those who come after us. Our economy, politics, even culture have reduced the access to an equal role. And that has produced resentment, grievance, that blossomed to the point that now every discussion feels like it is becoming an instrument for war by other means. And we are competing constantly, and we are cooperating rarely. And we need to change that. Because if you ask yourself, who is it that's competing, for all of the highly energized talk about like radicalism, increasing extremism, which is not wrong, it's unevenly distributed. I see very little in the way of like cutthroat competition and blood sport amongst the banks. As far as the average worker is concerned, but whether we're talking about this election or any other in the last 20 years, a given election tends to result in what feels like a different uniform on the same cop. And that's a problem. Elections do have consequences. They do matter, right? There are differences. But sometimes it feels like they're less meaningful than they should be. And that is, I think, what we're all feeling. That is the seed of all of us. We are supposed to have our hands on the lever as a collective public, as the commons, right? And we still get to cast our votes, but it seems like our votes are not as meaningful as they want. Do you really believe that the two frontrunners are what the collective will of this country would choose as the two best Americans, right? When you were a child and you were in school, they're like, oh, the president's the best person. Does it feel like that? I don't think so. And so that leaves us with the questions to walk us out of this. The question that we're being confronted with every day: what are you going to do about it? The reality is not much, right? Right now, if you're the average person, you're going to post a mean tweet, about somebody you don't like, and then post a picture of yourself looking cool on Instagram, and then forget about it. You want to watch your shows, you want to go home, you want to be comfortable, you want to, get dinner, you want to go to bed. You've got a job to do, right? You've got rent to pay. We're all running on a treadmill. And then what? And for what? Right now, we're doing it for the likes. We're trying to get approval. We're trying to get acceptance. We are being driven to compete for attention and for acceptance. We need to start, instead of competing, we need to start cooperating, working together to find our way out of this hole that is not this election, it's not this politician, it's not this policy, it's this system. And that's what Adam Smith was telling us about the year 1776, a powerful year for every American. The internet is broken because institutions are competing against the individual, while the individual is competing against other individuals. We need to shatter that design, because competition is everywhere, but it's only against the powerless. We need to look back at the avarice of those princes. Right? And I don't just mean in the context of government. I mean everywhere. I mean, Jamie Dimon, J.P. Morgan. We need to think about the systemic influences on our lives and how we can correct for them. The people who throughout all history had the means to diminish the amount of metals in our coins, which is inflation, simply by a different name. We're not using metal anymore, we're using paper now, but the game is the same. We in this room are using a technology that has taken the metal and the paper away from them. And it is through this single lever that they have set flourishing societies on the path to inevitable poverties. And I just want you to remember, every time you look at the grocery store's prices, that you are not alone, you are not isolated. Everyone in that store is dealing with the same battle that you are. We have to cooperate, we have to work together, and we have to make sure they do not reduce this country to the land of the free and the home of the slave. The only way we will do that is if we work together. So please, by all means, cast your vote, but don't join a cult. There's a lot of work to be done. Thank you.
All right, Dr. Paul, we spoke a few months ago and you warned us that with all this money printing from the Fed and the stimulus checks handed out by the Biden administration, that inflation was inevitable, inflation which you described as a tax on everyone. So now that even the preferred Fed measures point to inflation, what does that signal to you?
Well, it looks like there's a lot more of the same, but you know, the one thing that I like to do is when I think about inflation, talk about inflation, my definition is slightly different than the conventional use of the word. And most people say inflation, and you refer to prices going up, CPI and other prices, but the prices going up is a secondary event. It is a response to the inflation. It's a symptom of the inflation. The inflation is the Fed and what they do. I think the two most dramatic charts, they're very similar. If you go and look at, go to St. Louis Fed and look for a chart on the monetary base or M1, you see a flat line going on for decades, flat, flat, flat. And then the last couple of years, you see something going straight up. And that's the supply of money. In the 70s, when we were watching inflation and the breakdown of the Bretton Woods and all that was going on there, every day they were talking about what's M1 doing, what's M2 doing, and M3, and now they don't even record some of those numbers. They emphasize that the money supply, what are they going to do with the money supply? That isn't even brought up again because nobody wants to talk about it, because the money supply is increased for the benefit of those individuals who depend on new money and easy money and zero interest rates. And that's, guess what? That's a bunch of Republicans and Democrats in Congress that keep spending. But if we had real interest rate, all the spending would stop. So to me, it's the excessive spending, which is a tax, and then it gets monetized, and then prices eventually go up. Now, the reason that people say, well, that's been going up for 2 years, why did it just happen this week? That's the way it works, because there's a subjective factor when prices go up, and it's called the subjective theory of value. And so you can't predict that. That is a response to human action, the activity of millions, if not billions of people buying and selling. And then when they decide, it surprises even me, even though I accept this, that, you know, a year ago, people weren't worried enough. And then within the last month, a lot more people have become worried. That's all a reflection of us not getting the real information from the government. You know, I don't believe all the statistics. As a matter of fact, I'm suspect on what the government tells us most of the time. When they tell you that the CPI is doing something, just think, I think the silliest thing I've ever heard of in monetary policy for years now, it may be 3, 4, 5 years, that the principal policy of the Fed was we have to get inflation, which was the cost of living and the prices of goods and services go up at least 2%, because inflation, prices going up, is a sign of an economic growth. That's literally crazy stuff. And that is what they were doing, and they got it. Now they got the inflation. According to them, the prices are going up, but believe me, it's going to be much more than they were, and they're going to be talking real soon about how do we stop these price increases. And then you better look out for what kind of mischief they'll get involved in when they start doing that.
Well, do you think that the Fed can stop price increases with policy? Because the Fed has been saying that inflation will be transitory, but once prices of goods go up and you're paying more for clothes, cars, and food, can the Fed actually reverse that?
No, they have no control whatsoever, and this is the end point. They have a lot of control on interest rates and spending money and providing credit, bailing on people, and that sort of thing. But once the people wake up and realize that there's too many Federal Reserve notes circulating there, and that they just can't change it. They will try it, and they've done it ever since Roman times. What they do is they come in and wage and price control. Wage and price controls were known in ancient history because they did the same thing. They debased the currency, which meant the prices went up. And no, they'll have some form of wage and price controls. They already do have some prices are controlled. I mean, in one way, they manipulate wages, through union activity as well as minimum wage laws. They're manipulating prices. The most important thing under these conditions, if you wanted to move away from it, let everything go. And during the Depression, they did not want the market to handle things in the Depression because the market always wants to deflate. They want to get rid of the bad debt. They want to get rid of the bad investment, the malinvestment. And politicians and investors, they don't want that, and that's what prolongs the agony. And actually, and I do remember the Depression times and the war, the bad times were from the crash of 29 up to about 1946, because the war, believe me, things were depressed in the war. They actually got worse during the war, but then it just takes a long time. But if you allow it to correct like they did in 1921, they can liquidate the bad investments and the debt, and you can get back to new growth. But you don't have any effort to create new growth right now. They create the money, but where does it go? It gets people to stay at home. We pay the people to stay at home. Instead of them working and increasing real growth, they pay through inflation, printing money, and people get to stay home. And some of them, I guess, sort of like it because they're not worrying too much about getting a job, and the jobs are available.
Well, Dr. Paul, one of your criticisms regarding the Fed is that we're seeing the Federal Reserve take on a more political role. President Biden has ordered the Financial Stability Oversight Council to prepare a report on how the financial system can mitigate the risks related to climate change. Now, the council is composed of the heads of the major federal financial regulatory agencies, including the Federal Reserve. So essentially, the Fed would now be able to mitigate the risks related to climate change by using its regulatory authority. So, for example, by encouraging banks to lend to green businesses and by denying capital to polluters, if you will. And the Fed could also use quantitative easing to give green industries potentially an advantage over competitors deemed as non-green. Now, you recently wrote a piece about the woke Fed, as you put it, addressing that issue. So break that down for us.
Well, the whole thing is the Fed is making a significant change in their attitude and their positions. Used to be they were worrying about prices going up and unemployment. Then they decided, well, we have a responsibility about long-term interest rates, and how do you have QE if we don't do that? So they have these jobs that they do, and they do a lot of regulation. But now they have moved into the area of wokeism, and they have tremendous power to intimidate business people. Big question, and I'm trying to work this on a paper that I'm doing now, is why do business people capitulate and get involved in some of this mischief that's going on, the lockdowns and things, and following, because the lockdown is fake, but the business meeting goes along with it. It's because the Fed is powerful and intimidate, and they can regulate the money that they get. They can regulate who gets punished during, a lockdown, and who gets the recovery when they start bailing out. And they're doing it for a lot of different things. Any time there's a need for a social measure, they don't have a law that says, you can't do that. If you do that, we're going to put you in jail. No, what they do is they have the businessman come in to support the Fed and says to your people, you will wear your mask, because if you don't, we're going to fire you. So the Fed steps back and say, oh no, we don't do that. And the Congress, they don't write the laws that said that you're going to lose your job if you don't do this. But the businessman does, because he is intimidated, and all the way back to the most recent time in history otherwise was the businessman, how he supported, you know, the dictatorship of Hitler and others. But they're very much involved now, you know, the corporate world, Wall Street, very much dependent on the Fed, and the Fed can punish a corporation, so they go along, but you have to see them all in one piece. But then there's those who are honest business people, there are honest workers, and people who don't endorse all this stuff, but believe me, they lock. And can you imagine at being able to write laws on the lockdown and keep people from going to church? And now it's turning out that, you know, most of that pandemic was fictitious. People got sick, and we know all that, but it was nothing like that they claimed it to be, to literally cause these kids. The kids have not been, they had to wear masks, and nobody's ever gotten the disease, essentially. They don't get the disease, and yet they're still wearing masks in a lot of places. It's intimidation because there's too much power, and that's why I've argued against the Fed. I started arguing against the Fed in a serious manner 50 years ago, because that is when 1971, the Bretton Woods broke down, and there was no restraints on what the Federal Reserve would do, and there would be no restraints on spending. That's where we are today, at a critical point where this can't last a long, long time, like 50 years. This can last a while, and
right.
We don't know when it'll end, but it will end because it's non-viable.
Well, look, there has been a lot of debate and a lot of controversy regarding the response to the COVID-19 virus and whether measures were taken were too extreme. But to your point, we do have bodies that are supposed to be apolitical by definition and by essence, in fact, enhancing or exerting their political influence by the way that they allocate resources and funds. And that's why you and others are now creating more of a call for a Fed audit. What would that mean exactly, Dr. Paul?
Well, we don't know what they do on bailouts, who gets the money. You know, trillions and trillions of dollars are spent and passed out. And, you know, the money, according to the Constitution, everything has to be authorized and appropriated by the U.S. Congress. Well, none of that. How much have they spent in this last year or two? Like $6 trillion? And nobody actually knows how that happens. And it's being passed out for social reasons. You know, it might be global warming, and it might be for some other event, but it's one of these events that has very little to do with the economic needs of the country. But the effort to do this will continue. This very, very powerful. I want an audit. I started doing that. Matter of fact, even in the first time I went to Congress, I'd been there a couple of times. In the 70s, that was one of the first things I did, was ask for an audit of the Federal Reserve. And it's picked up steams. We've had 2 votes into Congress, in the House at least, and passed overwhelmingly to find out what's going on. Transparency. And there were a lot of liberal Democrats voted for him back then. Back in the 70s and the 80s, the vitriol, the fighting and the screaming and the accusations weren't anything like they are today. So you could work out, and there were a lot of people that said, you know, you're right. And a lot of members of Congress would come, and they said, you know, I never did really understand this Federal Reserve and how they do these kind of things. But they thought that the audit was a good approach. I want to get rid of the Fed. The Fed's, you know, a horrible, horrible way to run the economy. But they wanted to, they want to do that. They can do this, and that is the reason why I think that audit is very necessary. Because if you had a true audit and knew who was receiving all the gravy, maybe they'd want to get rid of the Fed. But the thing's going to collapse on us. This can't be viable. We'll have to have serious monetary reform. We will not pull out of this like we do in 79 and 80 with Volcker saying, well, we've had it, we've overdone it, 21% interest rates, we can't stand it, we're going to bite it, and we have to do it. That's not going to happen this time.
When you say collapse, what does that mean exactly?
Well, take a look maybe at the lower 20% of the people's income right now. Take a look at the streets in New York, Detroit, and Chicago, and take a look at a great city like San Francisco. They're out in the streets, and there's people say, well, there's not enough money. Well, there's too much money in the wrong hands. So no, it's already started. And if you look at the debt, the obligation of the federal government and individuals, even though cash balances have gone up, but it's not real money. It's just cash. It's just numbers. It's digits. So people have been able to pay down their debt and do a few of these things. But no, there's a certain amount of people in big trouble. I think the economy will really slow up because I think the numbers are fiction. You know, if prices go up 10%, that goes in, oh, GDP is going up. Prices are going up, so GDP must be going up. And I think that this administration is not doing any favors on energy. I think you're going to see oil prices continue to go up, and it's going to affect everybody. But that isn't the inflation. That's the consequence of the inflation, of running up these debts. You know, right now we collected about $3 trillion in taxes this year, and we're spending $6 trillion. Well, with just common sense, I bet you if I got a bunch of 12-year-olds in grade school, I could explain this to them. They say, why do people do, how do they do this? It won't work. So, but they keep thinking it will. They think it's magic, but it'll come to an end. No matter how much power the members of Congress have and the power of the president and the power of the Federal Reserve, it doesn't work because it's defying all economic laws.
Well, you know, Dr. Paul, because of this discontentment with the unchecked power of central banks, of the Fed, of the government, the way that money is being printed, the potential debasement of the dollar, which does seem to be an inevitability at this point, according to many, we're seeing a rising interest in alternatives like Bitcoin as a potential crypto asset, as a potential alternative store of value. Now, you're speaking at the Bitcoin 2021 conference in Miami later this week. You've always been a staunch supporter of free market, libertarianism, and a proponent of safe haven assets like gold. So where does Bitcoin fall into this for you? What are your views on Bitcoin?
Well, I know a lot more, at least I'll make the claim, a lot more about precious metals being money. And I was fascinated with this for a long time. But I'm also fascinated with what's coming. And people ought to have as much freedom as possible to have choices. So the one bill that I thought was a very important bill that I introduced in Congress, not only to audit the Fed, but also to get rid of the legal tender laws, competition, because right now there will be a debate, and I'm sure there'll be a debate at the end of this week. You know, some people, matter of fact, most people I meet in conferences like this, they don't hate gold or anything. They just might like crypto a little bit more. But the debate will continue, and the market will finally determine that. My goal is to legalize the competition, and that I think the people will sort it out. Freedom of choice will sort it out, and I don't think, you know, the bureaucrats or the politicians in Washington are capable of doing this. And that's one of the things that people are attracted to in the cryptocurrencies. It sort of has this going with the absence of government and central banking. My concern is that governments over the centuries have been notoriously very eager to have control of the money. Believe me, they will not give up control of the money. They will not. I don't think you're going to have a Federal Reserve Board chairman come up soon and say, you know, Ron Paul has this good idea. Let's get rid of legal tender laws.
Well, when you say, Dr. Paul, legalize the competition, what does that mean with regards to Bitcoin, and what role do you see Bitcoin potentially playing in that kind of monetary system?
Well, it would mean that, you know, if right now, if you buy and sell gold, you get it taxed. They can do that. If you make a profit in Bitcoin, you read stories about people being taxed on it. You can't tax money. You don't tax it. if you bought a dollar a year ago and it went down 10%, you can't take a loss because your dollar lost value. So it's the currency that if you compete with it, in some ways there's a little bit of that internationally, but nobody's allowed to compete at a national level. We're not allowed to compete with the currency. I know during the presidential campaign, a few of my enthusiastic supporters actually designed a coin, and they had my image on there, which was pretty silly, and they called it a Ron Paul dollar. They got into big trouble. They got in trouble because they could not use the word dollar. That was encroaching on the monopoly control of money.
But what is the main theme that you plan on conveying about Bitcoin when you address the conference on Friday? What is your overall perspective on Bitcoin?
Well, I won't try to explain exactly technically where it's good, bad, or indifferent. I will argue more the case for the legalization of freedom of choice. And the people should make a decision, not the government. And I don't know the answers of that because some people are enthusiastic about it and think that that's the only money that will exist and will replace the dollar. I think the dollar is going to be around, but it's not going to be worth much. And but payment of bills and the legal tender laws force you to use legal tender, so they won't even allow you to replace the dollars with a cryptocurrency. There will be laws against that. And but I wanted to totally legalize it. I think our problem isn't the technicalities of the gold standard or crypto. Our problem are the dependency on government and less concern about personal liberty. And what about property rights and contract rights? This is what we need to be concentrating on. And right now, though, people are interested in what the laws are regarding crypto and gold and all these things. But right now, our biggest threat in this last year, people haven't awakened to the point of what a horrible year where the Federal Reserve and the monetary authorities put on these sanctions and literally lock us up in our houses and make us wear masks that nobody's proven a mask is any good for you. It does when you might be doing surgery in a hospital, and I wore a mask then, but no, the mask is no proof of it. The lack of competition, say in medicine, when they had a good medication like hydroxychloroquine or ivermectin, they take it off the market. They made it illegal to use it. And that's what I want to make sure people can use gold and silver and save their money in it and not ever have to pay any taxes on the increase in the value of your substitute for money, which means you'd have to dramatically reduce the size and scope of government, and that's where the hang-up is. No, there's nobody in Washington. No, there's a few people, a handful or two. But no, the Republicans and Democrats have the same goals, spend a lot of money. When Republicans have been in charge, the deficits go up just as much and sometimes more, and that's what they depend on. You don't have the Republicans and the Democrats, arguing over the Federal Reserve or the budget. They don't argue over the foreign policy. Oh yeah, they debate the foreign policy, but nobody wants to cut a nickel out of that monstrous bubble in the military spending, and we spend more than 70% of the other nations put together. And we always have to be more. We got to be prepared. There's another war coming, and that's how they beat the drums of war. While I was there in the early part of this century, 10 years. And no, we've been in Afghanistan for 20 years. But that's good for the military-industrial complex. That's what has to be challenged. So the money issue, for me, in some ways, is a side issue because if you really had what I'm talking about, the contract would decide which money you're going to draw your contract up in. And if you wanted to draw up your contract in gold ounces, you could, or if you wanted to draw up their contract in crypto, that you could do that. Right now, not too many people are doing that.
But do you think, though, Dr. Paul, I mean, to your point, because the government and central banks have so much to lose, so much power to relinquish, that as you mentioned earlier, they will somehow intervene, crack down, regulate, increase taxes, stand in the way of the real rise and potential of Bitcoin?
Yes, but I would apply that same concern to gold.
Right.
Because, what was the first thing Roosevelt did in 1933? He immediately took all the gold from the people. It was $20 an ounce, and he pushed it up to $35 an ounce. And they do that, made it illegal. And the American people tolerated it all the way from 34 up to 1975, over 40 years. Americans weren't allowed to own gold. In the early 80s, I worked real hard and prodded them along to legalize gold and silver. And at least you can buy silver eagle and gold eagles, but you need to legalize freedom. And that I think is the hardest thing for people to accept, because they want to be taken care of. And that's why, right now people are very content that are receiving nice checks every month. They're so content they don't want to go work, and there's jobs going back. It's one of the weirdest things. This predicting exactly what's going on right now would have been a hard prediction, but it's understandable from an Austrian viewpoint. Things like this can happen, but it doesn't make sense. But what does make sense, it can't last. You can't create wealth out of thin air. The duplication of monetary units has nothing to do with wealth. It undermines and destroys and dilutes wealth.